Aloha everyone, Joshua Hayes at BigWaveTrading.com. Going to try to make this video lesson a little bit shorter this weekend. First off, want to thank everybody for the thumbs up. If you can keep showing me love, I'm going to keep making these video lessons. I really appreciate it. Anyway, nothing has really changed at the market. My opinion on this hasn't changed. We have a massive wall of worry to climb. Sentiment is horrible. The news flow is negative, as it should be, because it's reality. Whether you want to believe it's reality or not, the negative news flow is the reality news flow. Now, does it mean that you have to invest off that? Absolutely not. Price is all that matters. So with that being said, look at this NASDAQ chart. This is Telechart version 7. We're going to mainly focus with these charts today. Beautiful uptrend, and look at the balance of power and the accumulation. So every dip, I want to be a buyer until there's a clear series of lower highs, lower lows on heavier volume. But just to show you how crazy this market is, here's the NASDAQ chart. This is what the New York Stock Exchange chart looks like. I can only assume, like the Dow Jones Industrial Average, S&P 500, and Russell 2000, we're going to eventually join the trend higher. But I tell you what, I've never seen, even in 1999, I've never seen these two indexes be polar opposites via the accumulation distribution and balance of power within the sector. So continue to focus on these technology stocks. What we're going to do is I'm just going to review with you the stocks that are hitting new highs after Friday's session since my initial long signal. You can call it cherry picking if you want, but it's not, because I'm going to be straight up honest with you. Right now, it's about 50-50 of what works, what doesn't. What doesn't work, we cut our losses on. It's rule number 1 through rule 1000 at Big Wave Trading. Then rule 1001 is don't fight the Fed. But rule 1 through 1000 is always cut your losses no matter what. You get long a stock, it doesn't work immediately, start cutting your losses. You can always hold on to a little portion to see if it works, but always cut your losses. That's rule number 1. The other thing to remember before I move on with these stocks is I always recommend 10 stocks, 10% of your capital. Every time you go long a stock, you use 10% of your account capital. You never risk more than 1% of your account capital on a trade. And that means you don't arbitrarily just set, oh, I'm going to stop out here, I'm going to put 50% and risk 1%. You have to adjust the dollar amount at risk to that stop level, inherent risk level, which I always give out to everybody before I take the trade. I tell you where I'm buying, what the limit is going to be, the stop and the limit on the buy side, and if it fills, where your stop should be. So you always adjust accordingly. But still, 10 stocks, 10% of your capital, that's the sweet spot that I want. So with all that being said, I also want to make mention, my methodology is still not in favor. As long as the VIX is near this 30 area and or above it, it's not going to produce huge gains. I showed you last weekend where the sweet spot is. It always has and always will be below 20. But even in 1999, like I said, I was wondering, how come I had all these amazing winners in 1999 and I don't have them this year? That's because during that period, we were in between 30 and 20 and spent most of the time around 20. So as long as the VIX is elevated, it's going to be rough from a methodology. The other portion is that as long as the time segment volume, let's go to the monthly, on the SPY, which is hard to see here, but it is negative. As long as the lead line is below the signal line, I'm going to have a tough time with everything working out all the time. The IWM has been even worse. It's been negative since sometime in June, July of 2018, has never crossed higher since. Until this lead line gets above the signal line, the SPY has the lead line above the signal line, and or that VIX is below 20, my methodology is going to remain out of favor overall, which is then why I prefer everybody to focus on canned slim quality stocks, especially the ones that beat on the top line, bottom line, and then especially on the ones that raise guidance. I'm not saying Facebook is a long here, even though I do like it, but I want to show you guys what I'm looking for with this methodology, which starting after this most recent upcoming earnings season, which starts this week, I'm going to start focusing on these leading stocks until that VIX gets below 20, until that monthly TSV turns on the SPY and IWM. My focus is going to be on these top quality stocks. And it's all the stocks that you guys know of: FSLY, W, Amazon, Netflix, AMD, NVIDIA, Facebook, and basically what I'm looking for here, Roku, because that's recently breaking out, SPCE. I want to show you guys what the deal is. Want to see the 9 EMA over the 21 EMA over the 34 EMA. These are Fibonacci moving averages. The best setups are then going to have these moving averages above the 50 with the 50 above the 100 and 200. These are always kind of going to be interchangeable, so I really don't care which one's stacked on top. But when they're all stacked like this, for instance, for Facebook, it was like back here, and it comes at the 21 EMA, and it enters a squeeze, I want to get long with the move above the candle that's off the 21 EMA. Now, I'm showing you Facebook, which we all know had a negative news event, so this chart is not, the one I want you to focus on, but that's basically what I'm looking for. Try to see if I can think of, let's see if Zoom Media recently. So you see Zoom Media moves higher here, gets below the 21 EMA. It's not in a squeeze, but you could take it above the 21 EMA. Once again, not in a squeeze, so these are not trades I would take off this chart, but you see what I'm talking about. Below the 9, find support at the 34, gets back above the 21. This is your entry. Zoom Media is up 65. So moving forward, this is going to be the focus of my methodology. But I want to show everybody publicly what we're going to focus on. But I'm going to show you what happens when everything does work out. So just to let you know, things on my end with my methodology, like I said, aren't going well, but I still do have some stocks that are working. VICR was a recent long position here. I want to show what everybody it looked like whenever I went long. Have a hammer engulfing candle over candle, heavier above average, huge volume, huge surge in volume, huge surge in balance of power, pocket pivot point signal. It's worked out flawlessly. This is what I want them to do. Doesn't mean they will do, but this is what I want them to do. Now, that's a 12% gain. It isn't much, right? But that's a quality long signal. This was given out to everybody, gold members, platinum members. Same with Zoom Media. Zoom Media was a new long signal back here. This is whenever I went long. The arrow is whenever so this is the signal date, candle over candle, heavier above average volume, rising green bop. I get long the next day. Now, remember what I was just showing you with Zoom Media? This is what it looked like back here whenever I went long. I want you also to notice something about it. Off the 21 EMA, 9/21/34, and it was in the tightest squeeze. So this is going to be moving forward. I'm going to load the boat whenever I start seeing the 9/21/34 tightest squeeze line up then with my regular telechart version 7 charts. I now know what I have to do. But just to let you know, Zoom Media, I traded this one too close to the vest. I took profits on the way up, but guess who no longer has a position in this stock? Me. I've taken my gains on the entire trade. That being said, still have members that are long. Congratulations. And in less than 4 months, 148% gain. Once again, not cherry picking. We're just reviewing the stocks that are hitting post-signal highs following Friday's session. VICR was one. ZM was one. PRTS is another. PRTS, this was the signal. Do you notice that huge volume surge? Do you notice that surge in balance of power down here? Watch both of them. And do you notice, even though it's a bullish hammer doji, notice that bullish candle pattern again. I don't know if it's going to work. I just want to know that I want to get long in case it does. Boom. Perfect. PRTS, 32% gain in 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions. Beautiful. Also want to show you a stock I tried to get long where my limit didn't fill. ANGI, you'll notice here, candle over candle, heavier above average volume, little bounce and bop. But what I really loved about that stock was that ANGI had a massive short float. It was a short float, a 60% short float. Gave it out to everybody. Now, I tried to get long, 12.21 stop, 12.34 limit. It ran up on me. Clearly a preferred institutional buyer got all the shares. However, members that had E-Trade and that took this trade via E-Trade got filled. Everybody that I know that used Thinkorswim or Interactive Brokers like me did not get filled. But once again, just want to show you how well they work. And then I want to wrap up this video lesson with the final one, UMRX. Now, what's funny about this is that I don't think with my new rules I would have taken it as a long position, but maybe I would have because I have a new rule. If the stock is below $1, doesn't make both of my BOP scans, one looks for green BOP for 20 days, one looks for max green BOP for 5 days, and doesn't have heavier above average volume that's at least 2 times the 50-day volume average, I won't take it. Now, this one had that 2 times volume surge, but does it have green BOP for the last 20 days or max green BOP for 5 days? No. So, but nowadays, I still might have taken it because look at that hammer candle, look at that volume surge, and look at BOP surge to max green. So this is probably one, since we have a clear level of support, I still would probably take, even though I have a new rule out there. But everything is lined up with this one. I just know me. I would still take it. If this showed up today, despite the new rules I've implemented for my account to keep me out, because a lot of these are losing more often than winning, I'm still taking this one. You see the next day I get filled, or else if I wouldn't have gotten filled, there wouldn't have been a white arrow. Remember with ANGI? Remember how I told you I didn't get filled? Do you see a white arrow on this chart? You see one on PRTS? You see one on ZM? You see one on VICR? You don't see one on ANGI, right? Well, let's look at what UMRX has done. Unbelievable. I don't know what's going to do this. That's the problem. But in 3 months, 848% gain. This becomes much more common, much more frequent, and it can happen more often than not once we get that VIX to around 20 and my monthly TSV starts trending higher on the SPY and IWM. That being said, this is a NASDAQ stock, so probably no surprise that it was able to do an 850% gain in 3 months. Wish we could have more of those, but right now we don't. And until my methodology comes back in favor, remember, it's at 921.34 EMA, looking for these leading stocks, especially if they're huge earnings, huge sales growth, raising guidance in the next earnings season. They go on my earnings beat list. Focus on those names. They pull back to the 21 EMA, retake that 21 EMA, especially if it's in a squeeze. This is going to be the preferred methodology moving forward until my methodology comes back completely in favor. All right, everyone. If you like the video lesson, give me a thumbs up. If you haven't subscribed yet, hit the subscribe button, ring the bell. Any questions, concerns, comments, curmudgeons, feel free to leave them below. I'll reply as soon as possible. Aloha, everyone.